Hey folks, welcome to another video by Stocktrades. My name is Matt, and today we are going to be taking a look at dividend growth stocks, in particular those that are expected to raise dividends this coming week. Typically, this is a monthly feature for us, but since there are so many Canadian dividend aristocrats slash all-stars that are expected to raise dividends in February, we decided to do a weekly video on the best dividend growth stocks in Canada. And we'll get to those companies right after this. February is the busiest month in terms of dividend growth announcements in Canada. Last year, there were 26 Canadian dividend all-stars that announced a dividend raise in the month of February. Considering there are only approximately 100 Canadian dividend all-stars, that means that a quarter of the companies are expected to announce this month. Before we jump into which companies are expected to raise dividends, just a reminder, please comment below and like our video. We're interested in hearing which of these stocks you own, and if you think some of these stocks may not actually announce a dividend raise this week, or if you think that they will come through for investors. Let us know in the comments. And with that, we're going to get to one of our first stocks, which is BCE. BCE is the largest telecommunications company in Canada, and actually we just did a video on BCE and we talked about how it is one of the best Canadian dividend growth stocks in the country. So not surprisingly to see BCE on tap to raise dividends this coming week. The company typically announces a dividend raise along with fourth quarter and year-end results, which is usually at the end of January or early February. Consistency and reliability, this is pretty much what you get with BCE. It won't wow investors with double-digit growth, but it is definitely one of the most reliable blue chip companies on the TSX index. It also doesn't hurt that the company is one of three that form an oligopoly in the telecommunications market. Here's a fun fact that you might not be aware of. BCE's current 12-year dividend growth streak would likely be a little bit longer if not for a failed takeover attempt by a group led by the Ontario Teachers Plan back in 2008. We talked about this in our last video, but during that time, BCE kept a dividend steady, which caused its dividend growth streak to effectively reset. Over the past 3 and 5 year time periods, BCE has raised a dividend by approximately 5%. Last year, the company raised dividends by 5.05%, and there is no reason to expect anything different in 2021. So we expect BCE is going to be as reliable as it gets. It will announce a dividend raise this week. Don't expect anything major, around 5% dividend growth, and that's okay. Combine that with a 6% yield, and BCE is an excellent dividend growth stock to own. Next up, we're going to talk about a couple of Brookfield companies, and first up is Brookfield Infrastructure Partners. This time of the year is when the Brookfield suite of companies are expected to raise dividends. And first up is Brookfield Infrastructure, which is expected to raise dividends this coming Wednesday on February 3rd. It's also worth noting that all of these Brookfield companies, including Brookfield Infrastructure, pays out their dividend in US funds. Last year, the company also spun out BIPC, which, along with BIP.UN, are intended to be economic equivalent. That means that the upcoming dividend raise and total dividends per share applies to both of these share classes. BIP is one of the fastest growing in the Brookfield family of companies, and at 13 years long, it is the longest dividend growth streak of the bunch. Although its dividend growth rate isn't as robust as it once was, investors can count on mid to high single-digit growth. Over the past 3 and 5 year periods, it has averaged 7.4 and 8.8% dividend growth. Last year's raise came in at approximately 7.2%. This year, expect much of the same, as it has a targeted dividend growth rate between 5 and 9% annually. We expect something in the range of approximately 7% this coming week. Brookfield Infrastructure Partners is not only an attractive company in terms of dividend growth, it also has rewarded investors with considerable capital appreciation over the past couple of years. We believe it's an excellent blend of growth and dividend growth for investors. Next up, we have one of our favorite stocks, and once again, it's one that we talked about recently, and that is Brookfield Renewable Partners. Brookfield Renewable is also expected to announce their upcoming dividend raise on Wednesday. So they are reporting on the same day as Brookfield Infrastructure Partners. Last year, the company reported independent of earnings, as it did so along with the completion of the acquisition of Terraform. So this year, we expect the company to revert back to its normal historical timing, which is to announce along with earnings. Much like BIP, Brookfield Renewable also spun out a corporation last year. So the same rules apply. It's intended to be economically equivalent, so the dividend increase will apply to both types of shares. Likewise, it also pays out its dividend in US funds. Much like Brookfield Infrastructure, Brookfield Renewable has a pretty consistent dividend growth history. It has an 11-year streak, and over this period of time, it has typically raised a dividend by approximately 5% annually. Given the company's consistency, we don't expect anything different this coming year. 5% dividend growth is probably what investors are going to expect moving forward. We also did want to point out, Brookfield Infrastructure and Brookfield Renewable Partners are actually not Canadian dividend aristocrats. Why, you might ask? Because they are funds. In one of our early videos, we talked about the differences between all-stars and aristocrats, and how I favored all-stars because of the minutiae of the inclusion criteria. One of the reasons why I don't like the aristocrat list is because it includes funds such as Brookfield Infrastructure Partners and Brookfield Renewable Partners. It also excluded Brookfield Property Partners, which I'll get to in a moment. It does include Brookfield Asset Management because it is listed as a corporation. So it's important to note that these two companies we just talked about are actually not aristocrats, but they are certainly all-stars because the all-stars does include them. Once again, minutiae of the detail here, and it is yet another reason why I prefer the all-star list over the aristocrat list. Now before we close, because those are the three companies we do expect to raise dividends this coming week, I did want to spend a little bit of time talking about Brookfield Property Partners. If you are a BPY shareholder, you're most likely aware of the fact that Brookfield Asset Management, so the parent company, actually has a deal on the table to buy out BPY. Typically when this happens, and we alluded to it when we talked about BCE earlier, when a company is being acquired, they do tend to keep the dividend steady. They don't tend to raise dividends. That being said, even if it wasn't a position to raise, I don't think BPI would. My opinion, BPI was on the verge of a dividend cut. Last year, the company raised dividends by less than a percentage point. And this year, given all the impacts that the pandemic has had on retail, I would have fully expected BPY to perhaps announce a dividend cut. So don't expect BPY to announce dividends this coming Tuesday when it announces their quarterly results. And that brings us to the end of our video. We have BCE, which is pretty much as reliable as it gets, Brookfield Infrastructure Partners, and Brookfield Renewable Partners. Investors can make the case to own all three in their portfolios. Hope you liked the video. Please comment below. Do you think any of these companies will keep their dividend steady? Do you think their dividend growth will come in above expectations? Let us know in the comments. And as always, please like the video and subscribe to our channel for more great Canadian content. Till next time.